And getting back to what Jess was just talking about, the volatility, especially on those CPI days, let's bring in Chris Murphy's co-head of derivative strategy at Susquehanna Financial Group. Chris, it's nice to have you with us, and give us a sense on how you're preparing for this very busy week, arguably the busiest before we get to the end of the year.
Yeah, you make a good point. Definitely the biggest till we get to the end of the year, just not to mention the two events you just talked about, Fed and the CPI, but also you have expiration on Friday, so might be the real last liquidity week of the year for people to move their positions around. CPI is the first big one. We looked at the S&P options, and they're pricing about a 2.3% move by the end of the day tomorrow. Yeah, and you can compare that to that average 3% move that was just mentioned. And it's interesting to note that these S&P options have consistently been a little bit light ahead of these macro events. I'm not sure if investors are expecting, it finally to come in line and not to have a big reaction, but it's been very consistent for the last number of them. But the move has been bigger than what the options have priced going in.
Well, then let's take it one day further, which goes down, of course, to the FOMC decision on Wednesday. How do you price that? And I believe the consensus right now in the markets is a 50 basis point hike. The QT pace continues as is. But then you're looking at terminal rates and hikes that continue into February, March, even some banks saying May. What does the options market tell you about that?
Well, first off, in terms of the move that's being priced in, about 2.9%, so a little bit more, obviously, for the extra day. And then a lot's going to matter on what's actually said. And when you have a 90% chance of a 50 basis point cut, maybe that's going to move the market a little bit. And then that outlier 10% of a 75 basis point hike, which will obviously depend on what happens tomorrow too, that's going to be much more of an outsized move. So really, if we get a CPI that comes in, somewhere around what we're expecting, then both of those Tuesday and Wednesday priced moves are going to come in because we're going to get close to 100% for 50 basis points.
And Chris, quickly, just getting back to what Jess Menton was talking about with the broader lack of conviction that we have seen within some of the options market, that idea of the markets moving to a potentially new low in the new year. Is there anything you can tell us about what you're seeing in the positioning right now within the derivatives market?
Yeah, absolutely. We've definitely seen an uptick in hedging for the first quarter of next year out into the second quarter. It definitely seems like consensus is that we're going to retest the lows in the first half, just, reading everything that's out there and talking to clients and things like that. If everyone thinks the same thing, it's hard for me to imagine that that's definitely what's going to happen. But at the same time, we're seeing an uptick in hedging, with the expectation of growth and earnings reprice in the first half of next year.